all those universities up there, and they have trouble keeping technology workers in Boston, which is a technology hub. And I talked to one guy who runs a big technology company who said the problem that we have is that every company is a tech company these days. Everybody has a website, everybody has an e-commerce site, and so all these jobs are out there for people. Now they're probably going to go away with AI or something, but for right now, if you have those skills, people want that.
I have a friend who her kid wants to go to like coding camp, and she's like, I really don't want him like playing, behind a screen, and that's not what I want him to be doing. I want him to be out playing in the world. I'm like, everybody's going to be coders at some point. It's not a bad thing.
I think no one is going to be coders at some point.
Why?
Because AI is going to do it all for you. You don't have to do that mundane weirdness. I mean, have you seen code?
No, there is something to my daughter talked about it in school. Like she was working around with ChatGPT for coding. So I get what you're saying. But all right. Anyway, fast forward. Jobs tomorrow. What should we be on? What should be on our radar?
Well, we do want to see the number of jobs created because the Fed's been saying they want to see job creation slow to a replacement level, just to create enough jobs for people who are coming into the labor force.
What's that?
It's interesting. The general view is to keep the unemployment rate stable. It needs to be about 70 to 90,000 a month. David Wilcox, who's our chief central bank economist at Bloomberg Economics, and I were talking today, and he said, if you look at it in terms of who actually is coming into the labor force and what kind of jobs they're looking for, you need 30,000. And we're looking at 195,000 and thinking that's a big slowdown. So we've got a long way to go there. Unemployment, the Fed forecast would be up in the 4% range, and we're not there. So how do they change that? What are we going to get out of it? And then you mentioned earnings, obviously going to be important in terms of what the average hourly earnings rate is going to be.
Is there a specific bar that all the economists hang out in? Like when Ellen Zentner's in town and Joe Bruce-Wallace is around, do you guys like go to a certain place?
There are the occasional economist get-togethers, yes, but it's not a regular thing.
So it's not like McSorley's is always packed with labor economists.
If you'd like to open one of those, maybe that's a job opportunity for you. And it's small business, which contributes to.
There was a bar in Berlin called the Bierbörse. It still is there, actually.
Is it where all the economists went?
Well, the thing is, when you order too many of a certain beer, then the price starts to go up, and they have a board there.
Oh, yeah.
And if no one's
supply and
ordering a
demand?
beer,
Supply and
exactly,
demand,
the price starts to go down.
That's like the Uber model for beer.
Exactly. There's surge pricing on Bitburger.
Oh my God, that's so funny.
Yeah.
And so appropriate. Anything else?
You could manipulate the market. I'll tell you very quickly. My favorite AI story of the day
20 seconds.
is the Air Force was conducting a study of a drone, thing that could, AI drone that could go kill the enemy. And the operator had to tell the drone, okay, fire now. And sometimes they wouldn't tell the drone to fire now. So the drone said, my job is kill the guy. The operator is keeping me from doing it. So he tried to kill the operator.
Oh my God.
Whoa.
All right. On that, and enjoy the music going out, our Mike McKee.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We do check markets all day long here on Bloomberg, and this update brought to you by BNY Mellon Insight. June 6th through the 8th in Orlando. Don't miss the essential event for the financial advice community. Visit insight.bnymellon.com. Earnings out from Dell Technologies. It's reporting revenue that beat analyst estimates after sales of PCs to businesses did not fall as sharply as anticipated amid the slumping PC market. Dell shares right now, they're up by 4.5%. We are seeing a renewed rally in tech giants. That has sent the S&P up 49 points today, up by 1.2%. NASDAQ up 195, up 1.5%. The NASDAQ 100 index up now by 1.6%. The Dow up 223 points, up 0.7%. S&P extending this year's gain now to 10.1%. 10-year yield 3.60% with a 2-year 4.33%. Spot gold up $15 the ounce to $19.77, up 0.8%. West Texas Intermediate crude oil up 3%, $70.12 a barrel. While when it comes to the next Fed meeting, Kathy Jones, chief fixed income strategist at Charles Schwab, says you cannot ignore recent Fed speakers.
I think we have to listen to Jefferson and Harker on this. Came out and made it clear, not likely to hike at this meeting, but want to leave the door open to a hike next time around.
And you can hear more of that conversation on the Bloomberg Surveillance podcast. You can download it wherever you get your podcasts. Again, recapping, stocks are higher, S&P up by 1.1%. And that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie Pellet there. Well, you are listening and watching Bloomberg Business Week on Bloomberg Radio and YouTube, Bloomberg Originals. Forgive me, everybody. I said it was the first day of the third quarter. I don't know what I was thinking.
I didn't even hear you say that. So
You know, you never listen to what I say.
I always listen to what
you
you
don't.
say.
You obviously didn't. Otherwise, you would have said Masser. It's not.
I will say that I listen much more closely when I'm not on the show with you.
Well, I'm going to say Michael, who was listening to us, one of our fans, said, hey, like you, but it's not the first.
What, he tweeted at you?
Yeah, he did. Michael, thank you. I like you. Matt Miller, I'm not so sure. All right, so let's talk about retail, if we may, because investors liking some of the results, not so much. Macy cutting its outlook, demand trends worsening, but the stock rallying after initial drop this morning. We've got Nordstrom shares jumping, better than expected quarterly results. And Matt, we have Dollar General stock plunging. It slashed its annual profit forecast, citing rising economic pressures on its shoppers, which always gets me worried because that's the low end of retail.
Right. I mean, I was just going to say that's a wide range, right? Completely different shoppers, I would imagine.
Completely.
At Macy's or Nordstrom's than Dollar General. On the other hand, Nordstrom is seemingly doing better because of their discount. And I don't know how cheap it is actually I imagine Nordstrom Rack is still pretty expensive, right?
Yeah, it's their cheaper end, but I will say that they've been going through a lot of stuff, right? They've been having some difficulties, so they've been beaten up for a while. But yes, it's not inexpensive, but that's where you go for bargains. Anyway, someone who really knows what's going on is Mary Ross Gilbert. She's senior retail analyst at Bloomberg Intelligence, and she joins us on Zoom from Los Angeles. Hey, Mary, nice to check in with you. So, a bunch of, retailers reporting, kind of wrapping up the retail earnings season or getting close to it. Let's start with Macy's, which I still feel like Lisa Bromwitz hit it right on the nose earlier today. I think Macy's is still trying to figure out what they want to be.
Well, that's interesting that you say that, because when I think about what's happening at Macy's, I'm really seeing an improvement in the overall execution of the business. But I think as you started to talk about the differences in the consumer, you spoke about Dollar General, where the consumer there is getting really hit and they're at the low end. So if you look at Macy's, their core customer is earning somewhere around under $75,000 a year. And so that's where you're seeing the real hit on the Macy's side. Mm-hmm. Now, on the Nordstrom side, and you brought up Nordstrom and then Nordstrom Rack, and you sort of wondered, well, hey, are they a little bit higher end? And the answer is yes. So the average consumer household income for the Rack is $100,000, whereas at at Nordstrom, the banner, it's actually over 150,000.
Wow.
So you can see that there is a difference there.
I would not
now,
have guessed that.
Bloomingdale's,
Wait,
again,
say
is
that
at the
again?
higher end.
So
they're
for
gonna
Nordstrom, the headline store, it's 150,000. That's the average household income.
income.
At the Rack, it's 100 grand, and at Macy's, it's 75. Is that right?
Yeah, that's for their core customer.
I always think
will,
of Macy's
you
as
know,
really fancier because
Do you really?
Bloomingdale's is across the street from us, right? And Bloomingdale's is
Yeah, well,
expensive.
Bloomingdale's, because I was speaking specifically about the Macy's banner.
Right.
So Bloomingdale's, the banner, is going to be akin to Nordstrom. And in some cases, I feel like it's higher end.
I think so
But
too.
because they have that designer element within Nordstrom, that really crosses over well with Bloomingdale. So I would say that their customer base is very similar.
So why do you think Macy's sold off? I know why they sold off initially. And then why do you think they rallied? Is it just the market bounce? I found that hard to believe because it was a pretty substantial low. I think it was down about 5-6% at its lows today.
Yeah, it really was. I mean, it's hard for me to know exactly what's going on in terms of the stock movement. If I had to venture a guess, I'd say part of it could be short covering, thinking that, maybe this is the end of the bad news, especially since Macy's came out, dramatically cut their guidance for the year. And I think they did it to really leave room for upside, especially in the second half, to outperform in the second half. So I really think that was sort of the key element there.
It was, to me, a little bit concerning to read what Jeanette said, and I think I wrote it down to myself somewhere around here. He said, last year they had even expected a downturn in 2023, but this year it was worse than, or this month they realized it was even worse than expected. Let me get the direct quote. We planned the year assuming that the economic health of the consumer would be challenged, but starting in late March, demand trends weakened further in our discretionary categories. So it's even worse than they thought.
Yes, it was even worse than they thought. So it was more dramatic at the Macy's banner,
Yes.
less so at Bloomingdale's, right?
Mm-hmm.
Because the Macy's banner was down like 7.8%, something like that on a comp sales basis, whereas the Bloomingdale's banner was down 4.3%, and then their high-end beauty banner, which is called Blue Mercury, was actually up 4.3% in the quarter. But I think there's another key point here, and that is they definitely saw an effect with weather. And really where they saw the weakness in the categories was around sort of spring and summer merchandise. And that what happened is they've had to take a hit on that, discount that, and move it out. And they're very good at doing that. So Q2 is really going to have the negative effect of that markdown activity. But when I walked through the stores, I was just there on Tuesday walking through the stores, and they look very clean, meaning a lot of fresh merchandise in there. They're beautiful. They're continuing to upgrade their flagship stores. So when you start to walk into a Macy's now, it's starting to look more and more elevated, almost like, especially the beauty department, almost like walking into a Bloomingdale's or a Nordstrom type environment.
That's where they make
Just
the
to
money
give you an
too,
idea of what
right?
they're doing.
That's where they're making money. I feel like perfumes and makeup, right, in terms of
Ugh.
margins. What?
That's the worst. I try and get through and out of that floor as quickly as I can. Everybody's spraying you. They all want to talk. It's like a stop and chat thing. Get away from me.
It really is.
So let's talk. Go ahead.
It's an important category, as
Yeah.
you mentioned. It's 30% of their sales, around this time of year. But come the holidays, it's 40%. So it is big.
All right, Dollar General, other spectrum, stock's down about 19%, so it's pretty much hovering near its lows of the session. It's down a lot this year. I'm just looking at what it is. It's down almost 34% here in 2023. So, Mary, how do you see that? Is it a case that people are trading up, so they're not shopping there, or is it something more substantial and not a good sign, certainly, for shoppers at the lower end of the economic spectrum?
Okay, well, not to talk over our expert on Dollar General, which is Jen Bartashis, but just knowing what's going on with the lower end consumer, they're having to cut back on discretionary, and that's really what you're seeing there on the Dollar General channel.
Yeah, I just was looking at a chart from Torsten Slok, also, who's the chief economist at Apollo. global management, and it shows that credit card delinquency rates are moving higher. This has got to be a concern, especially at the lower end, if they don't have money packed away, like, wealthier consumers.
That's exactly right. One interesting point, and that is that employment still remains strong. So I think there is going to be some resilience there. It's just that there's not a lot left with inflation in food and energy. And so, that's where they have to be very careful in their spend. So I think we're going to continue to see some choppiness, across the board with retail, which is what we'll see, where we might have a strong week or month here or there. And then all of a sudden, after that, we'll see some weakness. So yeah, I think there's going to continue to be some choppiness, but there is, to a certain extent, some resilience. But also remember that in the first quarter, we're going against some very, strong figures last year. So the comparisons are really tough right now. They get so much easier in the second half, and that's where things could look a little bit better.
All right, we got to run. Hey, Mary, thank you so much. Mary Ross Gilbert, Senior Retail Analyst at Bloomberg Intelligence on Zoom from LA. Victoria's Secret reported, how did we miss that with you in the studio?
Carol, there used to be a Victoria's Secret right across the street.
I remember.
Remember I went over there and got you some stuff at one point?
It's a little Santa hat. I remember
Yes,
it.
it's
I
a
actually
Santa
still
Claus
have
hat.
it. It's a
Yes.
Santa Claus hat. Stock's down 9%. It was down about 15%. Some disappointment over their results. So how did we miss this one?
I don't know. I kind of ignore that kind of stuff. Ever since cancel culture popped up, I've stayed away from Victoria's Secret. I never go to the fashion show anymore.
He's a little nervous. I do remember that piece as well. I think, all right, we're going to have to dig that one out. Right now, though, let's get to world and national news. Save ourselves, thanks to Nancy Lyon. She's in our 99.1 newsroom in D.C. Hi, Nancy.
Thanks, Carol. The Senate is racing to pass a debt limit bill to avert a default, with the ex-date set for Monday. Senate Majority Leader Chuck Schumer says it needs to get done as soon as possible. Meanwhile, Republican presidential candidates are nearly uniformly against the legislation. Bloomberg Government's Congress reporter Jack Fitzpatrick with that angle.
You want to show that you're a true conservative. Opposing this is one way to do it, to criticize the speaker for not getting enough out of Biden. So you heard that from Ron DeSantis, Mike Pence, Tim Scott, Nikki Haley. But you did not hear it from not only the former president, but someone with a working relationship with the Speaker of the House, Donald Trump, who has been very quiet on this.
Again, Bloomberg Government's Jack Fitzpatrick. A more granular look at personal finances shows more than half of young workers in the U.S. do not expect to do as well financially as their parents. Bloomberg's Amy Morris with results of a new survey.
The survey by the TIAA Institute and the Aging Well Hub at Georgetown University finds many young adults started their careers carrying student debt and fear they'll never be able to buy a home because of high mortgage rates and low inventory. 42% of adults ages 24 to 35 say they're living paycheck to paycheck. 48% say thinking about global challenges makes them want to, quote, live for today. 56% say their retirement income will come from personal savings. Amy Morris, Bloomberg Radio.
Police in Austin, Texas are checking all of its cold cases after the arrest of Raul Meza, who may be a serial killer. Meza was arrested at a Texas bus stop days after calling police and allegedly confessing to killing his roommate. Officials say they're now also linking him to another murder from 2019, and they fear there could be more. Global news 24 hours a day, powered by more than 2,700 journalists and analysts.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:41 on Wall Street. We are now well off session highs. The Dow, the S&P, NASDAQ still in the green. Let's find out what's happening as we head right over to the first word breaking news desk for today's afternoon call. And here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks still with a bid right now, with the Dow currently up 118 points. S&P's gained 32 and NASDAQ climbs by 134. The U.S. 10-year yield at 3.6%. Gold is up 15. Oil trading in the green. But Bitcoin is lower by 0.6%. Of the main 11 S&P sectors, only utilities were in the red, and leaders to the upside in the Dow, American Express and Visa, while Salesforce fell 4% after earnings and led to the downside. Also regarding earnings, Dell just reported EPS beat estimates, while Dollar General plunged 19% after its numbers. And in other news, Fed's Harker said we need to be restrictive at this restrictive level at least through 2023. And wrapping things up, some of the names reporting after the bell tonight include Broadcom and Lululemon. Live from the first word breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody. We've got just under 18 minutes left in today's trading session on this Thursday, June 1st. It is time for the Drive to the Close. And back with us is Randy Watts. He's Chief Investment Strategist at O'Neill Global Advisors, joining us once again on Zoom in Miami. Randy, nice to have you here with Matt and me. And I have to say, you and the team at O'Neill have definitely been on our minds with the passing this week of Bill O'Neill. Just top of mind for you and your thoughts on him. This is a legend, when it comes to the investment world, and certainly well known.
I think Bill really personified the American dream. He was born in Oklahoma in 1933 during the Depression and the Dust Bowl era, and he came from humble beginnings to be incredibly successful in the stock market. He was the first person to buy a seat on the New York Stock Exchange at the age of 30 or younger. He was very much self-made. He obviously founded Investors Business Daily, which was a national investment publication in 1984. He wrote a famous book called How to Make Money in Stocks that sold over 2 million copies. And interestingly, he was one of the first people to use a mainframe computer to analyze stocks using different data rankings that reflected the characteristics of the individual stocks. So an innovator from the start, and really a great example of the American dream.
Well, and it's interesting too, right? If you think about kind of where markets are today and the use of data and how influential it is. I mean, I love talking to you because you're a technician and you do look at the trends, and certainly on a data basis. But it is interesting, kind of, his interest and the importance of data on the street today.
It is. It's funny. A lot of the things that he started using back in the 60s and 70s, we now take for granted. But back then, it was very cutting edge, and now you can just see how it's seeped into the overall investment climate and how important quantitative and technical analysis is to investing in not only in equities, but in a variety of instruments.
Well, like we said, you guys and your whole team there have certainly been on our mind, and certainly his family.
Randy, on that note, what do you make of the AI craze right now? Not in terms of, as an investment, but in terms of investing. What do you make of that as a tool?
Using AI to invest in stocks?
Yes.
I think we're very, very early in the process. I think it will be additive over time. I think some of the enthusiasm is ahead of itself. AI doesn't really make judgment calls, right? So if you're trying to figure out in the beginning of the 90s if Starbucks is going to be a very popular trend, I really think that's a little more qualitative than the kind of quantitative feedback AI is going to give. I think the main thing that is going to help with AI is it's going to help increase productivity, and it's going to make a lot of businesses more profitable over time. but I do think we're maybe a little ahead of ourselves in terms of what it can do today.
I mean, it's apparently able to, at least on some level, decipher Fed speak, sentence by sentence, and judge whether or not it's hawkish or dovish.
True, but as we found out this year, really, the Fed is kind of it's a moving target with the Fed, right? So if you look at where we are today on Fed futures, the market's predicting over a 50% chance that by the July meeting they're going to raise either 25 to 50 bips, and that was a very low number a week ago. So it changes so quickly that if you're just using the stale data of a transcript or a quote, that can get out of phase very quickly. So I wouldn't really put all my investment eggs in the AI basket yet. I think we're early on in it, and I think initially what it's going to do is help productivity, but I wouldn't use it to pick my stocks right now.
So when you look at a stock like NVIDIA, best performing stock in the S&P 500, just blowout performance, mega rally this year. And I look at something like RSI, Relative Strength Index, easily overbought. I mean, this isn't a name you would touch.
That's a name which has either got to go sideways, which is kind of the best outcome, or pull back. But normally when a stock has that kind of a run, it usually has to do one of those two things. Right? It's had such a big move, it's now extended technically. And I think that really goes to the market, if I can shift a little bit, which is the market's been extremely narrow. So if you look at the QQQs, right, they're up, I think, 32% year to date.
Which is a tech-heavy ETF for those.
Which is a tech-heavy ETF. It's the 100 largest stocks in the NASDAQ. Maybe I should have said that for listeners. You compare that to the S&P, which is up about 10%. And then you compare that, to the Russell, which is flat. And obviously the Russell has 2,000 stocks in it. So it's been a very, very narrow group of stocks that's been driving this market. And that's going to resolve itself, probably, one of two ways. Either the leaders sort of slow down and the rest of the market catches up, or the leaders are going to have to come down. I'm hopeful, and what we're really trying to focus on at O'Neill is, are we going to see a broadening of the market? We're very hopeful that's going to happen. But to really have a bull market from here, the market's got to broaden. Remember, the Russell is still trading below both its 50-day and its 200-day moving average. The NASDAQ and the S&P are above it. But again, if you disaggregate those numbers, they're being driven by a very small number of stocks. The average stock in the NASDAQ is below both its 50-day and its 200-day. So while the average is up because of a small group of stocks that are being driven by mega cap tech, the average stock actually isn't doing that great this year.
Hey, help us out with something. Matt and I have been having some fun because we worked together for a long, long time, and we think about all the different market cycles we've gone through, and everybody's like, all the cash on the sidelines waiting to come back in.
We've been together for a few decades.
It's a few decades. We started in the sandbox. But having said that, Randy, is that an important thing you watch as an indicator about the potential to kind of fuel more equity momentum?
I think there is cash that can come into equities. I think what is going to influence that is, where we are in the rate cycle and what the economic outlook is. Remember, earnings in the first quarter were down year to year. They're down about 1%. And I'm sorry, about 3%. And earnings estimates for the full year have been coming down. Obviously, the last couple of days, we've gotten some very negative prints from consumer-related companies. So I think for the market to do well from here, we really need kind of two things. The first is to get a sense that we're getting close to the end of the rate cycle. Recently, it looks like maybe the Fed still has a little bit more to do. I could easily see Fed funds going to 6%. Okay, I mean, remember, PCE was 4.7% last month on a year-to-year basis. That's still obviously way, way above what the Fed is looking for. And then the second thing is, what's the outlook for earnings? It does appear maybe initially people were a little too bearish on earnings going into Q1. We hope that's going to continue to be the case. I'm not sure it is, given the slowdown we're seeing in consumer spending. But if we can get through the rate tightening cycle and earnings can stabilize, then I think a lot of money can come into stocks and the rest of the market can catch up to where big tech is right now.
All right. Well, always appreciate the time that we get with you. Randy, take care. Talk to you soon. Randy Watts, Chief Investment Strategist at O'Neill Global Advisors, joining us on Zoom from Miami. This is Bloomberg Radio.
your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. We are minutes away from the latest numbers out of Broadcom and VMware. Broadcom shares, they're down 1.9%. VMware shares, they're down by 2%. We did hear from Dell Technologies earlier this hour. Dell reported revenue that beat analyst estimates, and Dell shares, they are now up by just about 1.3%. Palantir Technologies CEO Alex Karp says new AI developments at his company are so powerful, quote, that I'm not sure we would even sell this to some of our clients. Karp is the founder and CEO, and he spoke with Bloomberg Technology.
You know, I've been at this for about 20 years, and I know it will take everyone else 4 or 5 years to build this. We're rolling it out. Our customer base is large, and we have, you know, usually we have to go out and find people. Now we have customers, especially in the U.S., just calling us every day.
And today we've got Palantir shares down by 1%. You can hear more of that conversation on the Bloomberg Technology podcast. You can download it wherever you get your podcasts. Goldman Sachs is warning investors of a sharp slowdown in its investment bank from the bumper gains a year ago. Shares of Goldman Sachs, they are trading lower today. Right now, Goldman is down by 2.4%. J.P. Morgan Chase plans to close 21 First Republic Bank branches by the end of the year. J.P. Morgan up 1.3%. After earnings, Macy's up 1.2%. After earnings, Dollar General down 19.7%. And those are some of the company stories at this hour. I'm Charlie Pellet, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
TikTok, everybody. Just about 5 minutes left in today's trading session. Getting ready to wrap up the trade. Matt and I soon will head over to Romaine and Scarlett, check in with our TV side, bring it down to the close on this Thursday, and not the first day of the third quarter.
No, it's the first day of June.
It's like, this is what happens when you get awakened by your daughter at 5:30 in the morning. Like,
I think
what?
it's a mistake that anyone could make, Carol.
I know,
Cut yourself a little slack.
I know, but I feel like we have a smart audience. You want to get it right for them, and that kind of stuff.
Anyhow, I think it's
talk
interesting that we are rallying today when we dropped yesterday. And by the way, one of the most difficult jobs I ever had was a stocks writer.
Yeah.
I was a stocks writer in Frankfurt. And on any given day when there's a rally or when there's a sell-off, you have to make up a reason for the first paragraph.
No, you don't make it up, Matt.
Well,
see, you got to get it right.
You have to give some kind of reason. So yesterday, the stocks reporters were saying the reason is that we were worried about valuations of these big tech companies.
About
and today,
AI?
the big tech companies are leading the rally. So apparently, we're not worried.
It's hard being a technology company and a technology stock. Yeah, to me, you got to look at economic growth. You got to see where the numbers are going, because ultimately, if the economy can chug along, then bottom line things are going to be okay.
At times, completely divergent.
Can we
from the
talk about
stock
something
market,
really wacky?
Right? The economy.
I know. 30, 40 seconds. Did you see the story? I love this story. Oh my God, Tom King was talking about it. Airlines are weighing passengers for safety reasons after COVID.
It makes perfect sense to me. I mean, if they weigh my luggage to see which side of the plane it has to go on, they should be weighing me too. There is a huge divergence. There's a bifurcation of humans, right? Some even grown-up human beings are only 130 pounds.
But why all of a sudden are we weighing people? Air New Zealand, by the way, is the latest to do this.
They should have been weighing people before, but they didn't want to offend customers, passengers. And now that they had to for health reasons for a while, now they're just going to continue to do it.
Yeah, they say Air New Zealand says it's to calculate the weight and balance of the loaded aircraft. I get that when I've been on small planes, like you've got to balance out the luggage and where people sit. I've been, where you've got
You can't put the fattest people on one side and the skinniest people on the other side. You've got to mix and match.
Can you say fat on there?
I think you can say fat still. I mean, I'm a little bit chubby.
Guys, we're living in funny
I need
times.
to get back down to my beach bod.
Yeah.
Got to cut out the carbs.
What is it, you're fighting weight?
Get a little bit more cardio in.
All right, everybody.
So I can fit into those Lululemons, to my yoga pants.
Don't go there. This is going to get us into trouble.
Okay.
Right now, we're going to head over to the TV side. Beyond the Bell starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Scarlett Fu. We're counting you down to the closing bell, and here to help take us beyond the bell. It's a global simulcast with Carol Massar and Matt Miller. Welcome to our audiences across Bloomberg Television, Radio Originals, and for those folks streaming in our partnership with YouTube. Carol Massar, stocks pretty much holding on to most of the gains that they had. I think the last time we spoke about an hour ago, a little bit of a risk-on vibe here on this Thursday afternoon.
Yeah, absolutely. And we've been talking about it, right? We did it last hour as well. The outperformance that we're seeing once again in a handful of names, particularly some of the big technology companies, because that's where you're ultimately seeing the outperformance. I don't know what changed from yesterday, to be quite honest, but here you go.
Yeah, I don't know either. I think someone woke up and said, bunny, bunny.
Bunny,
well,
bunny.
yeah, bunny. You know, yesterday investors were selling big tech stocks because the valuations are too high, and today they're buying those big tech stocks.
They're
if you look
apparently okay.
at the S&P, it's NVIDIA, Apple, Microsoft, Amazon, Meta, all adding to the index. And if you look at a breakdown of the index by industry groups, you'll see that IT stocks are the big winners right now, and utilities, consumer staples, and real estate are the losers. So it's just the mega caps, the 7 stocks that have contributed 100% of the gains to the S&P 500 that are up today.
Well, what's different today also is we're one day closer to the jobs report tomorrow on the heels of some data that show the job market is holding up just fine, and the manufacturing data shows a bit of weakness, but not so, even as it holds up, not so strong that the Fed has to do anything about it right away.
All right, getting the closing bells here in New York, and it looks like it's going to be a pretty good day all around the tape here on this Thursday afternoon. Let's take a look at the Dow Jones Industrial Average, higher by more than 150 points, or about 0.5%. Believe it or not, that's pretty much your laggard on the day. Meanwhile, the S&P 500 moving higher by 41 points, up about 1%, and a firm close above 4,200, highest level that we've had on the S&P going back to August of 2022.
Grindr ringing the bell.
The NASDAQ composite up about 160 points, or about 1.3%, closing out at its highest level since April of 2022, while the Russell 2000 up about 1% here on the day. Carol Massar.
All right, Romaine, let's keep everybody on track here. And let's keep,
isn't that
Matt
interesting?
Focused. What, Grindr?
GRND is the ticker.
Match Group, by the way, some outperformance today, up about 10%. Hey, where you're also seeing outperformance, I know you guys always make fun of me, but if you look at those Chinese names that trade in the United States, up about 4%, so some mega outperformance. They've been under some pressure, some concerns about the Chinese recovery, but certainly not today. Back off and back in by investors.
I don't make fun of you, Carol.
Well, you do.
Well, I just play a little bit. But it is important. I don't disagree. And I like to look, obviously, at Chinese data, Chinese companies as well. If you look at the winners and losers in terms of industry group, as I was saying, it's really the IT stocks, it's the tech stocks, the mega cap stocks that are the winners. Tech up 1.33%. Industrials up 1.25%. Energy up 1.25% as well, as we see oil recover. It was down below $70 a barrel yesterday. It's come back up pretty strong today. Utilities and consumer staples, the only losers, and even they aren't down by too much. Consumer staples only off by less than 0.1%.
All right, let's get to some of the gainers today. I am really kind of bummed. I had Match on my list earlier. I think it's the #1 in the S&P 500. I took it off, but it is up 10% today. So anyway, let's focus on another M company. Macy's up about 1.2%. We'd seen some selling earlier in the day. We've talked about this. The company, taking markdowns, other measures to address excess spring merchandise. They also cut its earnings outlook for the rest of the year. But nonetheless, by the end of the day, investors pushing it up about 1%. NetApp also was an outperformer in the NASDAQ 100. You're looking at about an 8.5% gain here by the close. Results topping expectations. Analysts pretty pleased and saying that a lot of the results really helping to bolster its margins specifically. And then NVIDIA back among the gainers. This one up about 5% once again. Company CEO, you might have seen a story by Bloomberg heading to China, plans to meet China executives in the world's biggest chip market. And that's despite some of the tensions between the U.S. and China and despite U.S. curbs against China. But nonetheless, NVIDIA, the CEO, making quite a world tour and spending a lot of time over in China this week.
All right, I'm going to take a look at some of the decliners here because Dollar General, despite the overall rise in the market, had its biggest one-day sell-off ever, losing 20%, the worst performer in the S&P 500, after it slashed its full-year forecast to reflect that it's no longer expecting profit growth, talking about economic pressures on its customer base of lower-income shoppers. We already knew this would likely happen from Dollar Tree and Target's similar warnings. And Lucid, the EV maker, is raising about $3 billion through a common stock sale. Its biggest shareholders, Saudi Arabia's sovereign wealth fund, is buying the majority of the issuance, which, according to Bloomberg Intelligence, reduces the likelihood that Lucid will go private anytime soon. And finally, Salesforce, which we broke the earnings for you yesterday, quarterly earnings beat, but it failed to raise its full-year forecast, so you can see the stock losing 4.7% on the day.
All right, the Lucid story, I think, is fascinating, and I'm glad they get to go on a little bit longer, but it's definitely dilutive to shareholders. Let's take a look at what's going on in earnings. Five Below is coming out with maybe a little bit of a disappointing forecast. It did beat on first quarter EPS, 67 cents. We were looking for 62 cents, but they see second quarter EPS between 80 and 85 cents, and the street was looking for 88. They see second quarter sales between 755 and 765 million. The street is looking for 768. And this kind of reminds me a little bit of Dollar General, which Carol was talking about earlier, also disappointing investors. If these stores at the low end of the, I guess, economic spectrum are missing, that is
stock's rallying.
That is maybe bad news.
It's rallying though.
The stock is up in the aftermarket?
Yeah.
All right,
Well, it's all over the place, actually.
Yeah, we're going to get another read on some other retailers as well. Lululemon, of course, which makes a little, I guess, higher end.
Different end of the spectrum.
They're going to schedule the report a little bit later.
now it's
We're going to
rallying.
get Broadcom and a few other names here after the bell as well. Before we get to those, let's get a quick check here on what's going on in the yield space here, because remember, we had 11 straight days really of a sell-off that was going on in the Treasury market, and that's actually flipped now to basically a 3-day rally. That continues to push yields down just a little bit here. We're right around 4.3% here on the 2-year yield, down about 6 basis points on the day, 3.6 on the 10-year yield, and your 30-year yield camped out right around 3.8%, Carol.
All right, so let's get to Lululemon, just crossing the Bloomberg terminal. Here's the red sticky, the big headline we're focusing on. Company with the outlook for the fiscal year of net revenue, $9.44 billion to $9.51 billion. It had seen $9.3 to $9.41 billion, so it's definitely bumping up that forecast. Right now, though, the stock initial reaction down about 2.5%. Let's go to the first quarter. First quarter EPS, $2.28 a share, folks. That's a beat. The estimate was for $1.97. First quarter stores comp sales ex FX up 16%. That too is a beat. The forecast was for a gain of just under 12%. And if you look at the gross margin, 57.5%. That's a little bit better. All right, now we're seeing some reaction to the upside. Right now, the stock is up, Scarlett, about almost 6%. On the year, though, ahead of this, just up about 2.5%.
Also, gross margin, 57.5%, which is better than the expected 57%. And looking through the comments, the CFO talking about a meaningful acceleration in their China sales trend with the reopening of the Chinese economy, coupled with lower costs, in particular air freight, contributed to the better than expected performance. So Lululemon seeing some increased profitability here. It goes back to that idea that the premium customer seems to be holding up just fine in this economy.
Yeah, that's actually, we were talking a little bit earlier, Scarlett, with the Bloomberg Intelligence retail analyst, Mary Ross Gilbert, and she pointed out that, Nordstrom has average household income of $150,000, and even Nordstrom Rack is $100,000. Whereas if you look at Macy's, the banner stores, it's only $75,000. That to me was a little bit surprising. And so those stores that are serving customers at the lower end of the earnings spectrum are disappointing, it looks like, while those that serve people that are wealthy enough to buy Lululemon yoga pants for $120 or however much they cost are doing well.
It'll be interesting to see whether that holds up. I thought some of the commentary that we had, I think it was out of Capri a couple of days ago, of course, makes Versace and Michael Kors. They seem to also be suggesting that you are still seeing a shift in spending there. Obviously not to the extreme that a Dollar General or the lower income spectrum is seeing, but something to keep an eye eye on there. And I guess, Matt, I mean, you poo-poo $100. You probably have $120 pair of yoga pants somewhere, don't you?
Or $1 million leather jackets.
Right, yeah.
Yeah, there you go. There's
That's right.
there's a weak spot.
Matt Miller single-handedly keeping the motorcycle jacket business in business.
All right, let's go to VMware. They're coming out with their earnings, just crossing the Bloomberg terminal. First quarter revenue, we're looking at a little bit of a disappointment. $3.28 billion. The estimate was for $3.31 billion. First quarter adjusted EPS, $1.49. That too is about 6 cents light. So we're seeing the stock, at least so far, little change, just slightly lower in the aftermarket. So we'll look for some more data on some of the subscription and license revenues, some of the numbers there to get a better feel on that number. All right, guys, anything more that we want to pick on Matt about?
Aw.
Just make sure to say bunny bunny at the start of July.
Bunny bunny. And also in August, right?
Yes.
Okay.
And then back to rabbit rabbit in September.
We got
I
it.
love you, Scarlett. All right, guys, that's it. We got to go. That's all, folks. Another bunny said that. Remember that? Bugs Bunny.
Yeah.
That's all,
Yes.
folks.
Good one.
All right. Our cross-platform coverage, radio, TV, Bloomberg Originals, and, of course, on YouTube, Beyond the Bell. We'll see you again soon. And stuck between love and hate right now, I guess you could kind of say, is the Speaker of the U.S. House of Representatives. We're talking about Kevin McCarthy. It's not easy being Mr. McCarthy. 15 rounds of voting just to get the job.
That was embarrassing.
And what he had to probably, give up in order to get there. So with more on the fate and future of the U.S. House Speaker, a great story on the Bloomberg and at Bloomberg.com by Bloomberg News congressional reporter Billy House joining us on Zoom from Washington, D.C. Billy, thank you for joining us. Hard to be Speaker McCarthy right now?
Well, it is. I mean, in one sense, he had his greatest achievement as Speaker with passage in the House of the debt ceiling bill last night, but he had to rely on more Democrats. More Democrats voted for it than those in his own party. And of course, some of those in his own party now are angry and resurrecting the old talk of dumping the Speaker again.
Yeah, even if you poo-poo what this legislation will ultimately, do for the economy or do for debt reduction, you have to admit that it was quite an accomplishment for him to get President Biden and the Democrats to bend on a lot of the issues that he did. So I feel like for the centrists, he's a bit of a hero right now. But do they matter, Billy?
Well, that's the way you might look at it if you're a centrist. If you're from the far right, you might wonder why a lot of the things that were in the House passed bill, of course, it was only a Republican passed bill, were eliminated by Biden. So in that regard, they see Biden as the winner, not McCarthy, and therefore not their party.
So what's the future for the House Speaker? Like, is it fair to say that he could lose his job?
It's probably unlikely that, and boy, that's iffy words, huh? But that it'll happen right away. We do know that the band of ultra-conservatives that call themselves the House Freedom Caucus is meeting next week. And they're going to discuss this idea of motion to vacate, which is, in other words, a no confidence vote, and whether to proceed with that. There's a lot of pressure on that band of about 20 to 25 people in that conference not to do so by other Republicans. But because he's got such a small margin, only a 4 or 5 vote swing in the House, such a move could force McCarthy to rely on, once again, Democrats to save his gavel for him. But it's unlikely that's going to happen right away. They'll let this smolder and simmer for a while.
All right, so I always think about, and I would say this whether he was a Democrat or Republican, the devil you know versus the devil you don't. And I do wonder who would potentially take his place and what the implications would be for a House of Representatives and, more broadly, our Congress.
Well, that's absolutely the perfect question. Who would take his place? And do they have anybody ready? Now, there's already the number 2 House Republican Majority Leader Steve Scalise of Louisiana, Jim Jordan, the Judiciary Committee Chairman, who had been a member of he's still a member of the Freedom Caucus, is often bandied about. But for a Democrat, they might say, we prefer McCarthy, and they could cross the party lines, and some have said they would, to help protect him from being bounced.
I wonder, remind us of the procedural, of the rules here, because Carol and I are never quite, I don't know if anyone really is
kind of
sure.
skipped out on civics.
What happens if they throw out McCarthy and then because of the radicals in their party, the Republicans aren't able to agree on a speaker? I mean, have we seen that in history where the House goes without a speaker for a prolonged period of time?
Well, two answers to that. This is very rare. It hasn't happened since the early 20th century. Or you could say, hey, we saw this in January when it took 15 rounds of balloting for McCarthy to actually win. So you could expect that latter thing to happen, a bunch of ballots. Who would they decide to vote on? And would McCarthy run again, even after just being bounced, which would be even stranger. It's really uncharted waters. And at a time when Republicans, some of them think they're got something to cheer about, it would be a real odd move for part of their party to just kind of undermine everything like that. But, they promised they would do this stuff. So we'll see what happens.
Bottom line, Billy, if the far right is angry about this and the far left is angry about this, then it must be a good thing, right? Are there people in Washington who are applauding McCarthy? Is there anyone there who says, this guy actually did a great job and we see a bright future for him?
As to his future, I don't know if anybody sees a bright future, but there are plenty of people applauding, even calling courageous what he did, and that's put in a bill on a floor that many in his own party would vote against. Some of those are basically centrist, the Main Street Partnership, the Problem Solvers, which is a group of Republicans and Democrats, and there's plenty of people. But then there's the others, the agitators like Steve Bannon, who tweeted, there should be blood in the water now.
Well, he always wants blood in the water. He just likes blood.
Is he still a political force, though, Billy?
Well, he's a political force with the right, and those, again, just 4 or 5 lost votes on the Republican side, as with all bills, could cause McCarthy trouble on him, attempt to oust him.
I always think about House Speaker, especially when they're from the other party, in contrast to who's in the White House. And I do think about the importance of the relationship between a president and the House Speaker. And, is this a good relationship potentially and more productive than maybe someone else who might take McCarthy's spot, meaning McCarthy and Biden versus somebody else in Biden?
Oh, absolutely. I think despite the rhetoric each would have outside of their personal conversations, both claimed they were victorious or their allies claimed they had stomped the other side with this deal. I think that these two developed a relationship in their phone calls and talks with each other that could open up further paths for negotiations. I do think that has happened. And like we mentioned earlier, the devil you don't know for Democrats is for somebody like Jim Jordan or another conservative to become speaker.
It's interesting.
Yes, I think McCarthy has done that.
David Weston on Wall Street Week, he was interviewing Steve Young last week, and it made me remember that incredible battery for the 49ers, right? Jerry Rice and Steve Young. In terms of a battery in Washington, we've had some memorable ones, Ronald Reagan and Tip O'Neill, right? Or Bill Clinton and Newt Gingrich. Does this, Joe Biden and Kevin McCarthy rise to that level?
Well, I think it's got the potential of doing that. Certainly, it's at the very first 4 months of McCarthy's speakership. But this was a huge, achievement for both men under pressure as the clock ticked. And yes, I do remember Steve Young. I remember him in the USFL with the Los Angeles Express.
Steve Young.
I love it. Listen, Billy, always appreciate it. Are we going to get this bill just quickly, 20 seconds? We're going to get it done soon, next week? What do you think?
Hey, the Senate's some of them are trying to get it done tonight. They're scrambling, but there's a lot of discussion on amendments and stuff, so we'll see.
Not a bill, right? It's not a bill. It's a budget, right? Or is it a bill? I guess so.
It's a bill.
It's it, Bill, but you can call it what you want.
All right. Where's Schoolhouse Rock when I need them?
Exactly what I was thinking.
Billy House, we so adore you. Thank you so much. He is congressional reporter at Bloomberg News, has seen so much when it comes to D.C. on the phone in the nation's capital. I do want to mention Broadcom is out. Second quarter adjusted net revenue, $8.73 billion, pretty much in line. The estimate was $8.72 billion. Second quarter adjusted EPS, $10.32 a share. That's above the street estimate of $10.15 a share. And specifically, their second quarter semiconductor solutions revenue, $6.81 billion. That too is a beat. 6.72 was the estimate. A quick check. The stock was a little changed initially in the aftermarket. Right now, Matt, it's down about 1%. But we were watching this because they certainly play into the AI chip space.
Yeah.
Yeah.
I always search for AI now.
All right.
Statements.
This is Bloomberg Radio.
headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long at Bloomberg. We are keeping an eye on shares of Lululemon Athletic, up now by 12.2% after hours. It reported better than expected profit and sales in the first quarter, showing the demand for pricey activewear is persisting, even as broader spending on apparel pulls back. Again, in late trading right now, we've got Lululemon up now by just about 12.2%. Broadcom forecast revenue for the third quarter. Yes, the guidance did beat the average analyst estimate, but after hours right now, looking at Broadcom, it is down by 2.8%. And VMware reported adjusted EPS for the first quarter that missed the average analyst estimate. After hours, VMware trading lower now by 0.5%. A move higher for stocks. The Dow, the S&P, and NASDAQ all gaining. We did finish off session highs ahead of the jobs report tomorrow morning. There are bets now that the Federal Reserve will be pausing its interest rate hikes in June. S&P up 41 to 4,221, up by 1%. We've got the Dow up 153, up by 0.5%. NASDAQ up 165, up by 1.3%. The Russell 2000 today up by 1%. 10-year yield 3.60%, with a 2-year 4.34%. Spot gold up 0.8%, 1977 the ounce. And West Texas Intermediate crude today up 2.9%. Barrel of WTI just above $70 right now at $70.06. So again, recapping, big move higher for Lululemon after hours, up by roughly 11%. S&P today up by 1%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Some earnings flow and a rally on this Thursday. We're going to switch gears a little bit because you might remember, well, maybe you don't, but we know we talk about the cost of healthcare a lot. We talk about inflation generally. Healthcare certainly plays into it. What? I know. What?
I'll tell you.
You got a story?
I was hit by a truck one time in New York, and I had to go to the hospital for like a month and had 5 surgeries, and I was messed up the whole time, and I had to deal with these bills. I had no idea, what I had to pay and what I didn't have to pay. I had to deal with the insurance company. They didn't really voluntarily help me. So it's like,
they didn't just pay for everything?
No, it ended up costing me a ton. I mean, tens of thousands of dollars. And by the way, what insurance paid for was over $250,000 for that. It is so expensive in this country. Having lived in Germany for the past few years,
very different story.
It's a very different story.
Well, what's interesting, we hear a lot of stories. We want to bring in our guests because we talk a lot about the spending that we do here in the United States on medical care, health care, and yet sometimes the outcomes are not on par in a positive way when you compare the spending in other developed countries. So let's get to it with Ji Bai. She is professor of health policy and management at the Johns Hopkins Bloomberg School of Public Health, supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. She's on Zoom in Washington, D.C. Ji, it is nice to have you here with us. Matt's not wrong. I mean, sometimes I look at a bill and I'm like, oh my God, it was emergency visit, and didn't have any other choice but to go there because it was midnight.
It's outrageously expensive.
Why is
outrageous?
Why is it so expensive in the United States?
Yeah, thank you. One reason for the high price is that there's no price information available to patient consumers. So they're blindfolded and cannot do comparison shopping. Then providers have no price competition and no incentive to lower their price.
But how do you do price competition in medical care? Like, is there like a Travelocity or something?
Yeah, because I have to say, G, as I said, I lived in Germany for the past 6 years. There, no one showed me a price before I had any kind of treatment. There was no price comparison there, but prices were significantly lower for care that was, if not as good, better than in the U.S.
Yes. Unfortunately, we have a very different system. In Germany, it's more public funded healthcare system. Here is more private funded. So if we don't have price competition, probably we're going to pay even much higher price.
Well, wait. So what kind of price competition do we have here? We don't, right?
We right now, think about.
Yeah, go ahead.
Think about the direct pay, like plastic surgery or over-the-counter drugs. We have price competition. That's why those services are relatively cheap. But for other services, covered by insurance, non-elective, we don't have price competition because we don't know the price.
So is there anything that can be done to change this, or have Americans just decided that we want to have the most expensive and not the highest quality healthcare in the world?
I love that comment, Matt. Now all Americans are footing the bill, right, through high out-of-pocket costs and high premiums. So price competition always bring the best value for consumers. So healthcare is no exception. So I think the first step is price transparency.
How do you do that? How do you do that? So what
right now we have actually
So what is it? Yeah, go ahead. How would it work?
We have 2 regulations right now asking hospitals to post the price for all their services, and insurance companies do the same. So it's just a start, but once the system start running, hopefully patients will easily get the information they need before they receive care.
When we're looking at reasons for runaway prices here, how much of it is our tort system? I mean, you can sue a doctor for malpractice for millions of dollars, and that's why the doctor has to get incredibly expensive malpractice insurance. That must drive it up a lot. And the other thing is, on the drug side of it, I mean, don't we all know that drug makers are just in bed with politicians? I mean, they charge for the pills that we have to buy exponentially higher prices than they charge in other parts of the world. So I feel like those 2 drivers are important to mention as well.
Absolutely. The compliance costs and legal costs imposed on providers, but eventually go to us, go to our patients. And for drug company, you are right. In fact, the Washington, D.C. is controlled by industry. So if we depend on Washington, D.C. to do things to reduce costs, probably we're not going to be successful. Eventually, it has to come from the market, from consumers, from the collective wisdom. So that's why price competition will be important.
You know what I find tricky? I almost feel like big hospitals. It's interesting. My family, a member of my family just went through surgery in an incredible hospital in New York City, and it was just impeccable, the care from start to finish. And luckily, covered by this incredible insurance we have at Bloomberg, to be fair. But it was incredible, the process. But at the same time, I look at these hospitals and they're building wings, and there's gorgeous cafes, and there's place to hang, and I almost feel like it's like academia. It's such a competition to build out and be the best facilities, and I feel like how much gets away from, it really just has to be about good care, and how do we kind of get back to that focus?
Love that, Carol. I think we have the best people. All the providers and hospitals, they are well-intentioned, but the problem is incentive. Our system has a lot of bad incentives. That's why we're looking at bad outcomes and inefficient spending. Once we get the incentives right, I believe we really have the best people, best brain to bring the best value for our patients and for everybody involved in the system.
So, G, are you at Johns Hopkins working to change the system? Are you trying to do something about it? Have you got a plan?
Yeah, we're determined to improve the system. Last week, 2 days ago, I testified with the House Ways and Means Committee and also with the Senate Health Committee. So all about how Congress can help the market to remove the frictions and let's all achieve the better outcome. But I do believe right now this is a hot button issue at the Capitol Hill. Both parties, if they really want to win the election, they must bring value to American people. And we're looking forward to your new initiatives between Capitol Hill and also all the stakeholders involved.
All I would say is I think this is a big nut to crack. It's one of the things in our economy that costs so much, is such a big part of it. And right now you do have heads of companies, whether it's drug companies, whether it's healthcare companies, they certainly have the ear of Washington when it comes to policy. And I don't know how you get those changes through when that's happening. Gee.
Exactly. So that's why I think top-down won't work, because all the policy eventually have to have support by those big industry interests, right? So it has to be remove the friction that prevent competition from happening. Then from grassroots, bottom up, have the competition run down the price, as is happening in any other industry.
All right, we're going to leave it on that note. Certainly a lot to think about, and certainly, like I said, tough nut to crack, but certainly some possibilities of change based on what G had to say. G. Bai, thank you so much. Professor of Health Policy and Management at the Johns Hopkins Bloomberg School of Public Health, supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies on Zoom in Washington. I had no idea that you had to pay so much.
Yeah, that was... don't ride motorcycles, maybe, if you're not fully insured, or be prepared to deal with the consequences.
You had a lot of injuries. You were out for a while.
I think this is one of those issues when we're talking about the cost of healthcare that I'm just not optimistic we're ever going to solve it until, the society is in flames. It's the same with Social Security or entitlement spending.
But what's the flames? What ultimately happens? I mean, we already have gaps in healthcare.
Zombie apocalypse, maybe? I can't see anything short of zombie apocalypse changing the system.
What about a global pandemic?
Well, no, that didn't do anything.
I know, that's my point. Like, there's your apocalypse, if you will.
No? I'm not calling for something worse than that, but I'm saying I'm just not optimistic that we can really change this. And I hope I'm wrong. I hope that the American people will wise up and vote for politicians that want to do something about runaway entitlement costs, insane healthcare expenditures, and, stopping war and helping us love one another. But it's unlikely.
Do you want to be Miss America or something? Save the world. No, listen, I'm with you. I agree that cost of academia and healthcare to me are one of these things that have just gotten out of control.
The cost of college, I understand why. Professors need to get paid. There's a lot of them. You need to have big buildings on large pieces of land.
Do you? Do you really have to have large pieces of land?
The college I want to go to,
All right. I don't. Okay. All right. We can talk about this later. Right now, though, I want to get a check on world and national news, and let's head back to D.C. Nancy Lyons, Internet 99.1 Newsroom. Hey, Nance.
Thanks, Carol. President Biden is on his way back to Washington after giving the commencement address today at the U.S. Air Force Academy in Colorado Springs. He gave graduates a restatement of his foreign policy initiatives, as we hear from Bloomberg's Irv Chapman.
The president said his efforts to restore worldwide alliances have amplified the effectiveness of America's, the world's strongest military.
The United States has rallied the world to stand strong with Ukraine. We worked with our partners, began training Ukrainian pilots on fighter aircraft, including the F-16, so Ukraine can defend itself today and in the future. And the American people's support for Ukraine will not waver.
The president said artificial intelligence could change the character of future conflict, and he shared the worry of scientists about its burgeoning capabilities. In Washington, Irv Chapman, Bloomberg Radio.
President Biden did take a tumble on stage after handing out diplomas. He tripped over a sandbag on the platform. He is said to be okay. As the search for victims continues in the rubble of a partially collapsed building in Davenport, Iowa, there are numerous questions about the safety profile of the apartment building before the collapse and the status of repairs. Richard Oswald is the city's director of development and neighborhood services. He says a clerical error caused the most recent building permit to show a pass status as opposed to incomplete.
I want the public to know that the status of incomplete is accurate. The repair work was never completed and never signed off on. So there was no assessment to a pass-fail.
Oswald says they relied on the assurances from structural engineers that the building was not in danger of collapsing. 3 people remain unaccounted for. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
News, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We do check markets all day long at Bloomberg. Lots of earnings after the bell. Broadcom, one of the world's biggest chip makers, said artificial intelligence spending is helping fuel sales, but not enough to offset a broader post-pandemic slowdown. Right now, we have got Broadcom shares little changed after ours, down by roughly 0.5%. VMware is reporting adjusted EPS for the first quarter that missed the average analyst estimate. After ours, VMware down now by about 1.5%. Dell Technologies reported earnings 1 hour before the market closed today. It came out with revenue that beat analyst estimates. Dell shares today did gain by 1.5%. Lululemon Athletica reporting better than estimated profit and sales in the first quarter. Yeah, and we've got shares after ours up now by about 11%. The Dow, the S&P, and NASDAQ all rallied today ahead of the jobs report tomorrow morning. S&P up 41, up by 1%. The Dow up 153, up by about 0.5%. NASDAQ up 165, a gain today of 1.3%. 10-year yield 3.59%, with a 2-year that's yielding 4.33%. Yes, it was an up day for the equity market, but just how much participation is there? Randy Watts is Chief Investment Strategist at O'Neill Global Advisors, and he was our guest right here on Bloomberg Business Week.
It's been a very, very narrow group of stocks that's been driving this market. And that's going to resolve itself, probably, one of two ways. Either the leaders sort of slow down and the rest of the market catches up, or the leaders are going to have to come down.
And you can hear more of that conversation on the Bloomberg Business Week podcast. You can download it wherever you get your podcasts. Gold today up $15 the ounce, up 0.8% to 1977. West Texas Intermediate crude up 3.1% today, back above $70 a barrel, 70.18 for a barrel of West Texas Intermediate crude. Recapping stocks higher, S&P up by 1% today. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks so much. Carol Masser, along with Matt Miller, live in our Bloomberg Interactive Broker studio on YouTube and Bloomberg Originals on this Thursday. Small firms are the bedrock of the U.S. economy. We say it a lot, accounting for about half of all employment. And so, Matt, I love talking about the small cap space or small business because it's such a great indicator on the economic growth.
Absolutely. And I wonder about how worried they should be. As credit tightens, small businesses are probably going to get hit harder than the big ones.
You're absolutely right. So let's get into it with Sharon Miller. She's Managing Director and Head of Small Business over at Bank of America, out with their latest update on small business owners. She joins us on Zoom from San Antonio, Texas. Sharon, how are you?
I'm doing great, Carol. Thank you so much for having me. It's great to be here with you.
Well, nice to have you with Matt and me. How's small business doing?
Well, despite all of the headlines that we are hearing in the news, and certainly there are struggles, and there are certainly business owners that are concerned about inflation and the economy and the environment that we're in today. I will tell you on the bright side that as we survey our clients and understand how they're feeling, over half tell us that they believe that their revenues are going to increase in the year ahead, and that they are optimistic about their own business. So there are headwinds, no doubt about it, and there are struggles and there are issues, but small business owners in general remain very resilient and ready for what may lie ahead.
So it makes sense to me right now. Unemployment is 3.4%, and even though earnings have come down, it's only I think 3% year over year for the big guys that we track, the S&P. Are these small businesses prepared for a recession if it comes? Do they have cash stashed away? Do they have credit lines already lined up?
Of those that we surveyed, and certainly the conversations that I'm having with clients, we found that about 75% of businesses are prepared for a recession. And so they have those emergency funds on the sidelines. They have lines of credit available, and they are prepared. And I think that is what came out of the pandemic. Now people are really understanding we've got to prepare for the unexpected. And what we are seeing and finding with our clients is that they are.
How has this changed? How often do you do this survey? Is it once a year or every quarter?
We do it. We survey our clients 2 times per year, and we release the main report once per year. So this is our 11th year of the Small Business Owner Report, and so we do monitor trends. We do want to understand how they're feeling about their revenue expectations, the economy, their own businesses. So we want to just get our finger on the pulse because we do. We bank over 3 million small business owners, and we are the #1 lender to small businesses in the U.S. And so we're here for our clients. We want to understand how they are feeling and what their needs are. And so we do that by having conversations across the desk every day, but also we survey just to understand in different parts of the country how people are feeling, what's happening.
Well, and I guess, and what I care, Sharon, is like always, I care about trends too and how things change either from year to year. So give me an idea, because I'm assuming in the pandemic, I don't know if you did the survey, that it was probably some pretty miserable numbers, but give me some perspective of coming off the pandemic, how these numbers change, or is 76% in terms of confident that their businesses could withstand a downturn? Is that pretty typical?
No, it's not. I mean, this is something that I think that came out of the pandemic when we heard that you're right, 76% said, yes, we do believe we can withstand a downturn. That has changed. I think many people going into the pandemic were not as prepared. And so today we're finding that they are. And by the way, they're looking at their business plans. They're making sure that they are reviewing those, not just once a year, but twice a year, quarterly, daily. What's happening? What is happening in their industry? How are they doing? And how can they pivot? And I do think that the topics like artificial intelligence, you've got topics like sustainability, and how to make sure that your business is capable in this new digital era.
What kind of loan demand are you seeing right now? Has it tapered off as rates have climbed? Are businesses, worried about borrowing in this environment?
Well, we still see strong demand for lending within our space. And I can't speak for all institutions, but again, we are the #1 lender to small businesses in the U.S., and we are continuing to extend credit and to support in the communities we serve, not just within our own 4 walls at Bank of America, but we also partner with community development financial institutions, so CDFIs. We also hear from clients, especially new business formation. So we know in 2021, there were 5.4 million new businesses started, which was a record. In 2022, 5.1 million new businesses. So we've seen a lot of innovation. These are record numbers of new businesses starting. And we want to be there for those business owners to establish their business and, have access to capital in the marketplace.
Hey, Sharon, you mentioned AI and how small business owners, I guess, are thinking about that, or it's certainly on their mind. Matt, you shared with me a Tracy Alloway story about the latest Challenger Jobs report, and it highlights job cuts from artificial intelligence just beginning. It was
3,900 in the last month alone.
Which is pretty significant. And I do wonder, Sharon, how are small business owners looking at something like AI? Is it something that they think, oh, great, I can use it to cut costs and cut workers? Or what's the conversation? I'm curious if you could glean anything from the results of the survey.
Yeah, the conversation has been mainly around how do I improve efficiencies, whether it be marketing, whether it be understanding behaviors of clients and targeting clients to get more business for their company. The conversation's also around payroll providers and how do I get smarter about my tools that I'm using for business. So AI is around, what I'm hearing a lot around marketing, getting to the people that they want to understand their product, as well as payroll services and just managing their business day to day. So yes, I think in the long term, we may see some of that helping to improve efficiencies where you may not need as many employees.
Right.
So I can see that going through as well.
Okay.
But today, I think we're very early on.
Sharon Miller, thank you so much. Managing Director, Head of Small Business at B of A on Zoom from San Antonio, Texas. First time challenger. Great and Christmas included that. That's really fascinating. Check it out at Bloomberg.com.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Broadcom, one of the world's biggest chip makers, says artificial intelligence spending is helping fuel sales, but not enough to offset a broader post-pandemic slowdown. Right now, we have got Broadcom after hours trading lower, down by about 0.5%. VMware reported adjusted EPS for the first quarter that missed the average analyst estimate. After hours, VM right now is down by about 1.5%. Dell reported revenue that beat analyst estimates. During the regular session today, we did see Dell shares up by about 1.5%. Southwest Airlines has broadly reaffirmed its financial expectations for the second quarter. And with more on the Southwest stories, here's Bloomberg's Kimberly Adams.
Charlie, it comes amid renewed predictions that strength in travel demand will carry into the important summer season. Southwest says it still anticipates solid profits in the period and for the full year, but it did not provide a precise earnings forecast. The Dallas-based company has been benefiting from a tight supply of aircraft and soaring demand that are pushing fares higher. The modestly rosier outlook may be a relief for investors after Southwest suffered a financial hit of more than $1 billion from an operations breakdown at the end of 2022 that forced it to cancel 16,700 flights over 10 days. Charlie.
And that's Kimberly Adams reporting. Southwest, which uses the ticker LUV out of Love Field, down today by 2.5%. UAL down 0.1%. Rival American down 0.5. Delta up today by 0.1. Those are our top company stories, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
All right, everybody, you are listening and watching Bloomberg Business Week. Matt Miller and Carol Masser here. Let's get another check on world and national news for you. Back to D.C. we go, and Nancy Lyons. Hey, Nance.
Thanks, Carol. The police chief in Davenport, Iowa, says 3 residents of an apartment building that partially collapsed Sunday are still unaccounted for. Earlier this week, authorities said 5 people were missing, but police chief Jeff Bladel says 2 of them have since been contacted and are safe.
We're not getting any further information that other people are in this building and missing. So right now, again, we are concentrating on those 3.
Again, Davenport Police Chief Jeff Bladel. The 6-story building partially collapsed on Sunday. The city has since released documents, including structural engineering reports, that show the building's owner was told that patches of brick facade were separating from the building, putting people at risk. President Biden was in Colorado today, where he addressed graduates of the Air Force Academy.
Class of 2023. All right, man, you better. This is a day you've worked hard to reach.
Biden accidentally tripped over a sandbag at the end of handing out diplomas. He is said to be fine. Biden is the 9th sitting president to deliver the commencement address to the Academy since its first graduating class in 1959. This is his 3rd time addressing the graduates there, but his first as president. Elon Musk's SpaceX has inked a deal with the Pentagon. The Defense Department will buy Starlink satellite communications terminals for use by the Ukrainian military. U.S. military officials have praised the role that portable Starlink terminals have played in Ukraine since Russia's invasion in keeping the civilian population connected, as well as providing crucial communications for the country's military. The government is not disclosing the value of the contract. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Carol and Matt.
All right, Nancy, thank you so much. You're listening to Bloomberg Business Week. Carol Masser along with Matt Miller. And getting ready for another 60 minutes here on Bloomberg Business Week. We're going to check in with a pretty cool story in Business Week that's about summer camps. And
I'm excited.
An interesting individual on Wall Street who's very much involved in that.
Did you go to summer camp?
I did not. I was a large family. Summer camp was the backyard in the woods.
Oh, right. I get that.
You probably did.
Well, I mean, I have a pretty big family, too, but I think my parents wanted to get rid of me. So I was shipped away every year for 7 weeks.
Were you really?
And it was one of the best experiences of my life.
I think it's great for Aggie. Our daughter, she did camp for not the whole summer. We like to have an.
But it's a big business. It's grown into a pretty huge industry, and yeah, we have a very famous person that we're going to talk about who has bought a couple of summer camps. By the way, I went to summer camp with Enrique Iglesias.
What?
Yeah.
Did you really?
I went to summer camp with Julio Jr. and Enrique.
Oh, my gosh.
And also with Prince Philip. At the time, he was Prince Philip of Spain. Now he's the king.
Are you serious?
Yeah. Right here in the U.S. of A., in Weld, Maine.
So you went to swanky camp?
It wasn't. It was all kids from, it was all kids who were either from Bexley, Ohio, Short Hills, New Jersey, or Madrid, Spain. For some reason.
What's that about?
I don't know. For some reason,
Landing
that was the
Maine?
pool. And now the pool has grown larger regionally. You know, we have kids from other states.
Are you going to send your kids?
Absolutely. Well, it was a boys' camp, so I have girls right now. I need to keep trying.
Okay.
You know?
Girls, hey, you know what, Matt?
It's the only reason I want to have a boy is so I can send him to my summer camp.
It's 2023 and girls can go to camp too.
But they can't go to this camp. It's a